Welcome back, everybody, once again to the Quick Carbon Podcast, episode 13 now. And thank you to Amir, new $2 patron on our Patreon. So that means I now have a grand total of 3 whole patrons on Patreon. If anybody else wants to help support the podcast and me, then links both directly through PayPal, which is preferred, or the monthly thing through Patreon are in the description below and in a pinned comment if I make one. You can also subscribe to and watch some of the stuff on my other channel, the AK Max Flights and Travel one. We're trying to get that to 1,000 subs and 4,000 watch hours so I can get that one monetized too. But regardless, this time around, you guys get potentially the off and on background noises of my cat playing with her butterfly toy. But as for the energy information, as we expected in the previous episode, U.S. oil production has begun its drop. It is no longer at 13 million barrels a day. It has dropped down to 12.4 and then 12.3 million barrels per day now. The inevitable results that we were expecting from the massive rig loss across all the U.S. Shale plays. And how much further this will continue, we'll have to see. How much further the active rig count falls when that data comes out tomorrow. And consumption-wise, U.S. data came in right in line with the expectations. Expected it to drop a little bit more, but not by any further huge amount. It dropped from last week at 14.4 million barrels per day of consumption down to 13.8. Again, still the lowest that it's been in half a century. Gasoline consumption actually went up a tiny bit, from 5 million barrels per day up to 5.1. Diesel fuel consumption came in at 2.76 million barrels per day. Jet fuel consumption is the new record setter, all the way down at 463,000 barrels a day. The lowest U.S. jet fuel consumption has been since 1967, 53 years ago. And propane consumption, as we're now coming out of the winter, is now below 1 million, down to 754,000 barrels per day equivalent. And U.S. crude oil inventories, because of the drastically reduced demand, are now up over 500 million barrels in storage, coming in at 503, making them just short of a sixth of the total global crude oil inventories as of the end of March, at least. As because of the drastically reduced demand, a few episodes back, we mentioned global crude oil inventories were at about 3.1 billion barrels in storage. And oil prices have dropped just a bit below $20 per barrel, despite the production cut deal being announced, because it's going to take a few weeks to actually turn all the dials and have everyone actually tone everything down. On a global scale, jet fuel consumption globally is down one little bit more to 1.7 million barrels per day. Baby. Which is also obviously the lowest that it's been in many decades. However, it's done falling as it bottomed out a few days ago, and since then, by very tiny amounts, has been gradually increasing back upwards. Now, in terms of expectations, I don't really expect U.S. oil consumption to fall below 12. Global oil consumption, although we won't get the April data numbers until the first week of May, I see falling further from 89 million barrels a day down into the lower 80s or the mid 80s. But I absolutely don't see some of these nonsense predictions about it falling all the way down to 50 or into the 40s. In terms of U.S. oil production, I definitely do expect it to fall down into the 11s, but whether it's going to go below that or not, I'm not certain. U.S. natural gas production, as an aside, is looking now like it has hit its second/final peak, as it was declining well before all the pandemic stuff started. And it had hit a high of 109 billion cubic feet per day, and since then, over the preceding months, has fallen down to 105. But obviously, we'll see where that goes further as that's now also going to be affected by the whole rig count drop. My overall expectation remains that a lot of the restrictive stuff is going to start easing off next month, and then is going to cascade further into the end of the severe portion of this come June or so. Although I do obviously think it will still then be several more months after that until demand levels start reapproaching what was normal up to this point. But this was one of the shorter ones, so that's about it for this. Thank you, everybody, for listening. Please like the episode if you enjoyed. Subscribe if you haven't already. Subscribe to the other channel. Also, hopefully, watch stuff on that channel too, because also kind of need the watch hours. If you want to support the podcast and everything, or just help me, then PayPal and Patreon are in the description and the pinned comment as usual. Name drops with glittery stars and sparkling lights if anybody does. But no matter whether anybody does or not, thank you, everyone. May God protect you all, and I will see you all around next time.